It's called dollar cost averaging. And so we're going to go back to Joe, the entrepreneur, and we're going to basically take a look at his approach to investing. Now, Joe was one of those guys who was in leadership at Enron, and he had an opportunity early on to cash out, basically. He had stock options. He owned a good portion. He owned a percentage of Enron, and a very small percentage, but in his world, that was a tremendous windfall. Great. Reminds me of a story. I'm going to tell you another story. It's not about Bill. It's not about Joe, the entrepreneur. It's about a guy I grew up with his name, Irvin is his name, but we called him Magic Johnson. I went to high school with Magic Johnson. I met him when I was in like the 6th grade. My friend Kirk, I hope I didn't already tell you this story, but my friend Kirk had really big hands. Kirk still has big hands, but he actually, you ever see somebody snatch pennies off their elbow? He had the Guinness World Book record. 52 pennies he snatched off of it. This is weird, I know, but it's probably way more than that today. But Kirk said to me, we're on our bicycles, it's June, it's summertime, and he said, hey man, you think I have big hands? I was telling him, man, you got the biggest hands I've ever seen. They're crazy, weird. It's like, you want to see big hands? Let me introduce you to my friend Magic. I'm like, Magic? It's like they call him Magic because he's magic with a basketball. So Magic at the time was in 7th grade or 8th grade. But my friend Kirk and I would get on our bicycles and we ride over to Everett High School, and the gymnasium is open even though it's summer. And there's one person in the gym shooting free throws. And my friend Kirk walked up to him and said, hey Magic, I want you to meet my friend Jim. And that's when I met Magic Johnson. And I went away from there thinking, why would anybody want to be in a hot, humid, muggy basketball court on a summer day when there's so much else to do? As we rode our bicycles to the lake and had fun and goofed off, Magic Johnson was practicing free throws. And that kind of tells the story. It's part of the story of Magic Johnson. I read a story about him not long ago. Magic Johnson had one investment that he regretted, maybe more, but one that he talked about in this story. And that was he invested when he was when he was with LA and he was famous. He got through Michigan State. We watched him win the championship, beat Larry Bird. He was a young kid, really, but he was a professional athlete. And so he was getting all these deals. And Converse tennis shoes offered him a deal to do an ad, a commercial for their tennis shoes, to be their spokesman, and he took it. They paid him money and he liked it. It was a good deal of money and he was thrilled. But Nike also offered him a deal. Nike was a brand new company at the time, and Nike offered him stock. He said, we will give you stock in our company to be the face of our brand, of our product. And Magic turned him down. He's like, no, I'll take the money in hand instead of the stock ownership. And this story relates to Joe, the entrepreneur, because if Magic will tell you, he's worth $600 million today. So he did a lot of things right from an investment perspective, but he could have doubled his, maybe more than that. He would have been a billionaire for sure if he would have taken stock in Nike. But he didn't do it. That's one of the things he regrets. Well, again, back to this story of Joe, the entrepreneur. He took the stock and he cashed it out at just the right time and created a tremendous net worth for himself. And one of the things he did with that net worth is he went and bought a farm. And Joe, when he bought the farm, I was his advisor, and he had a lot of deals going on, but the farm was very near and dear to his heart. And he had pigs, he had horses, he had chickens, he had crops, he had a lot of things, but he didn't have cows. And so he came to me one day and he said, I want to invest in cows. I think it'd be good to diversify. So I asked him some questions like, what are you going to do with the cows? How are you going to market? How are you going to buy? How are you going to sell? What are you going to do with the cows? So it was steaks, it was leather goods, it was breeding, it was, rodeo stuff, because Houston rodeos, a lot of moving parts. He always had this vision that was crazy, but he starts buying cows. He says, I want to buy cows. I'm like, okay, let's put together a strategy. How much are we going to invest in cows? And to keep the story simple, I'm going to say cows were $100 a head. Now, this story about Joe the entrepreneur, Joe the farmer, Joe the cow farmer. It's about dollar cost averaging. So pay attention. This is the story of Joe and cows. So Joe says, I'm going to invest in cows. Dollar cost averaging is a systematic approach to investing where you pick a number and you say, I'm going to invest this much every month, just like you'll do in your 401k. That's what Joe did with cows. He said, I'm going to invest $100 a month in cows. And it just so happens that cows were selling, guess what? $100 a head. So month number one, Joe buys one cow. Now month number two comes along, and guess what happens to the price of cows? It drops to $50 a head. So Joe's commitment, his dollar cost averaging systematic investing plan says he's going to invest $100 a month. But how much are the cows selling for this month? Not $100 a head, but $50 a head. So this month, month two, Joe gets to buy two cows for the same $100. Pretty cool, huh? But then the next month, month number three, Joe, sticking with his plan, investing $100 a month, dollar cost averaging, systematic investing, puts his $100 into cows, except this month, month three, cows drop all the way down to, guess what? $25 a head. How many cows does Joe get? Month number three, Joe gets 3 cows. And then month number 4 comes along. Now, month number 4, Joe sticks with his plan. He's getting a little nervous, though, but he sticks with his plan. Actually, he didn't really stick with his plan. He picked up the phone and he called me and he said, Munchback, dude, I think we made a mistake. You got me buying cows at $100 a month, and they went from $100 a head down to this month, month number 4, they're $20 a head. He's like, I want to get out of the cow business. This is crazy. I'm like, wait, Joe, time out. Wait, Joe, listen, trust me. This is why you pay me the big bucks, to listen to my advice at times like this. So I said, Joe, look, you got into this business, the cow business, because you needed cows. You needed what you can do with the meat, what you can do at the rodeo, what you can do with the hides, the leather goods, all that. Those things haven't changed. The only thing that changed is cows are now $20 a head instead of $100, and you want to bail? I'm like, dude, you need to sell your John Deere tractors and go buy a whole lot more cows right now. Joe's like, he thought about it. And he said, okay, look, I'm going to stick with the plan. I'm not selling the tractor, but I'm sticking with the plan. So month number 4, Joe bought 5 cows. So month number 1, they were $100. Month number 2, they were $50. Month number 3, they were $25. Month number 4, they're $20. If you're taking notes, I'll send you, when I do this video, I'll put an image up. When I post this video, and it'll show a chart like a bell curve with pictures of cows. You'll see it. So there it is. You're not seeing it now, but you'll see it when you see the video on YouTube. So Joe basically sticks with the plan. Follow the story. Month number 1, $100 a head. Month number 2, $50 a head. Month number 3, they're $25 a head. He can buy 3. Month number 4, they drop all the way to $20. He buys 4 or 5 heads of cattle on month number 4. And then the next month, they start to do the opposite. They go back up. So month number 5, the cows are going back up from $20 a head to $25 a head. How many cows does he buy in month number 5? If he sticks with his plan, his dollar cost averaging, his systematic investment of $100 a month in cows, he's buying cows, and now the cows are $25 a head. How many does he get? He gets 4, right? $100, 4 head, $25 a head, 4, that's $100. The next month, they go back up to $50. Joe sticks with his plan, his strategy, dollar cost averaging, systematic investing, $100 a month, investing in cows, his asset class, right? This is cows. It's like an asset class, just like, a large cap stock, small caps. Remember, right? Think about it that way. But this is cows instead of chickens or pigs or corn or soybeans. It's cows. Systematic investing plan, dollar cost averaging, $100 a month. And now it's, where are we? Back to month number. We went through month one, $100, two, $50, three, $25, month number four, $20, month number five, $25, month number six, they're back to $50 ahead. He buys two. The next month, cows get all the way back up to $100 ahead. That's when I called Joe. And I said, Joe, look, I'm your investment guy. I give you advice. And you called me a few months ago. You were freaking out. Remember? Yeah, I remember. Yeah, okay. Well, this month I'm calling you, and I'm telling you it's time to sell some cows. And we'll buy some more cows later, but right now we're going to take our profits. Not all of them, but we're going to sell some. So let's do the math. Somebody grab a calculator and help me. Yolani, I'll answer that question soon. But somebody help me do the math. So month number one, $100 ahead, one cow. Month number two, $50 ahead, two cows. Month number three, $25, four cows. Month number four, $20 ahead, five cows. So 100, 50, 25, and 20. And then we go to the next month, month number five, they're back up to 25. Month number six, they're 50. Month number seven, they're back to 100. So 7 months of investing. How many cows did Joe buy in 7 months? If you're listening, if you're paying attention, now's the time to show me that you deserve all 200 points of class participation. This is it. I'll wait. Yep, that's right, Brian. Yep, Apollo, that's right. So that's good. I got 2 takers. I will remember you. So 19, over 7 months, Joe bought 19 cows. Now, how much did Joe, and that's right, Hannah, how much over 7 months, this is not a trick question, but over 7 months with Joe's strategy called dollar cost averaging, his systematic investment of $100 a month into cows. Over 7 months, how much did Joe invest in cows over 7 months at $100 a month? Not a trick question. So about 37 per cow. That's not the question, Brian. I mean, how much did he invest? Yes, $700. He invested $700, exactly. 7 months, $100 a month, $700. And how many cows did he buy? 19 cows. So now, how much are his cows worth at $100 a head? Somebody add a $sign and 2 zeros. Yep, Randy, you forgot the $sign. Camille, you guys are great, right on. But there should be a $sign there. Just there you go. A $sign. Thank you very much. $1,900. So think about it. This is how this strategy works. It works. It is a great strategy. Joe invested in cows. Cows went up and down, just like every other risky asset you're ever going to invest in. Large cap, small cap, even bonds go up and down. So the point is, you have a systematic approach to investing, and over time, when the price is high, you get fewer shares. When the price is low, you get more shares. But over time, you maximize your return, and more importantly, you minimize your risk. Because what if Joe, think about this, what if his advisor would have said, hey, Joe, you need cows? Let's go buy cows. How much you got in your budget to buy cows? And Joe would say, okay, over the next year, I got $1,200 to invest in cows. But I'd be like, okay, well, let's do it this way. Let's do it a month-by-month basis. Let's dollar cost average so we minimize our risk. And let me ask you this, did we maximize our return with the volatile price of cows in that scenario? Yeah, we managed our risk by not investing all of our money at the same time in cows when they were priced way up here. It's like today everybody wants to know, should I buy gold? Maybe, but look at the price of gold today. Or look at silver, what it's done in the last few days. Now, I'm not saying it's not going to keep going up. I don't know. But I would say let's dollar cost average. If you got a long horizon, you don't want to take all of your savings and put it in one asset class because that's too risky. You want a dollar cost average and spread it out over other asset classes: cows, chickens, pigs, corn, soybeans, whatever. Does that make sense? Dollar cost averaging, in my opinion, is the most powerful investment strategy designed to maximize returns and minimize risk.